Let's just talk about how a Fed comes up with a dot plot looking into 2025 without making some assumptions about what the policy backdrop is going to look like.
Well, I think they are going to make assumptions. I think they're going to assume that the 2017 tax cuts do get extended. So I think what Powell said at the last press conference, we don't guess, speculate, assume, is actually contradicted by what they actually did in December 2016 when they did include the fiscal policy stimulus that they thought was going to be enacted by the first Trump administration. That was in the forecast. So I think, they have to assume it when it's big, when it's likely, when it's sort of clear what it's going to be, and when it's priced into financial markets. And I think that's true for the extension of the tax cuts. It's not true for tariffs or immigration policy because it's very uncertain about what those policies actually will be at this point.
Bill, do you think that that's why it's more important to look at, say, tax cuts than some of the other policies that could potentially have contradictory effects on inflation and growth?
I think the real problem on tariffs is you don't know how big they are, how long they're going to last, whether there's going to be retaliation. And on deportations, you just don't know the magnitude or speed of what the program is going to be. And so if you don't know what it's going to be, it's really hard to put it into the forecast in terms of its likely effects.
Well,
so I think the tax cut assumption is going to be in there, but nothing else.
Well, when it comes to tariffs, the September 2018 Teal book talked about the fact that in the first iteration of Trump, they just saw the tariffs as a one-hit threat. Do you agree with that assessment? And do you think that would still hold today for this FOMC?
I don't think they're making any assumptions on tariffs yet because we just don't really know what the administration is going to do. I think the big difference, though, the tariffs that were done in the first Trump administration were actually relatively small. The total tariff on imports went from 1.5% of imports to 3% of imports during the first Trump administration. We're talking about much bigger numbers now. We're talking about 10, 20%, 60% against China. So the magnitude may be much greater, but we're not really sure. Is this just a threat, or is it actually going to turn out in terms of substance?
So, Bill, what we essentially have is just the incorporation of tax cuts and missing out on two key pillars of Trump's policy going forward, immigration and at the same time tariffs. I know that this is a sacrilegious question, so you'll have to forgive me. But are the dots even useful this time around then?
Well, I think what's the problem with the dots is you're going to have an unusually rosy forecast because it doesn't include some of the more controversial economic policies that could really change the outlook with respect to growth, inflation, and productivity. Higher tariffs, deportation is going to be disruptive to the economy. It's going to tend to push inflation up. It's going to push growth down. And that's just not going to be in the forecast.
At this point, Bill, what's your base case for how they're going to sort of telegraph some sort of pause or some sort of adjustment to the process of rate cuts in 2025?
Well, I think it'll be done in a couple of different ways. Number one, the number of rate cuts that they show in 2025 will go down from last time. Last time in September, they had 4 rate cuts, 425 basis point rate cuts in 2025. So this time will be 2 or 3. And second, I think Powell will talk about how, inflation is a little bit sticky. The economy is doing really well. You'll probably see some upward revisions of the Fed's estimates of so-called R-star, the neutral rate. So I think all those things together will make it pretty clear that January is probably going to be a pause, and that's really what's priced into markets. Markets are very certain about December being a cut, and they're pretty certain about January being a pause.
Bill, what's your take? If you were on the FOMC, where would your dot be? What would you be looking for next year, and what the bigger concern is, inflation or weakness?
Well, I think the big place where I would probably diverge from the consensus of the committee is on R-star. Right now, the median estimate of R-star is 2.9%. So the Fed is basically showed the federal funds rate going to 2.9% in the SEP, not in 2025, but in 2026 and 2027. I'd have a higher R-star, probably something in the order of 3.5%, maybe a little bit higher. So I would not have as much cumulative easing of monetary policies as what the Fed will have.
And that seems to be where the market's at right now, certainly, as well.
Absolutely.